Welcome to another edition of Brian's Big Idea. I am Brian Bolin, and I am the aggressive growth stock strategist here at Zacks. And I've got a big idea, but I'm going to save that big idea. First, we're going to take a look at three companies, and then we're going to talk about a great service here at Zacks. So let's go right ahead and check out those three companies. We're going to start with JP Morgan Chase. Maybe a bank with them, maybe you don't. But it's JPM is the ticker. It's a Zacks rank 3, and a C for value and a B for growth. Kind of like that setup because I'm into growth names. It's a big boy at 571, big stock, and pays a little divvy here of 2.3%. But if we look at this chart, it has been up, and away. Banks like higher interest rates. Did you know that? They do, because then they can keep more of that money. They're going to loan that money out for more than they're paying you on your interest rate. And that is the basis of a bank, how they make money. They make it a lot of other ways, but that's one big way. Obviously, news about Jamie Dimon this week and him potentially getting successors in order. All right, our next stock is going to be Citigroup. Maybe a bank there, maybe you don't. Its ticker is C, the letter C, a 3. Most of these are going to be 3s as we head into the Zacks rank hasn't been updated in a while for most of these because most of the earnings reports are stale. But as you can see, this one moves up nicely. A $118 billion market cap and a 3.4% dividend. All right, so that's Citi. Now, finally, let's go down to Wells Fargo and Company. Maybe you've heard, maybe you bag with them, maybe you don't. It's WFC is the ticker. And it is too a 3, and it's an A for value and a C for growth. Not quite that perfect 45-degree angle, but we'll take it if you're in with Wells Fargo. They got a 2.4% dividend and a $200 billion market cap. And I talk about all of these names because guess what? They're all going to report earnings on this Friday coming up. It is the start of another earnings season. Can you believe it? It's here again already. Felt like we just went through the longest earnings season ever. But what are you going to do with earnings? I mean, are they going to beat? Are they going to miss? I don't know. But I'll tell you what, we do have this wonderful service. It's called Surprise Trader here at Zacks. Surprise Trader. Surprise. They're going to be, who's going to have a positive earnings surprise? That's what we're looking for. Who are the stocks that do it? Well, I'll tell you what, David Bartosiak runs this service. Here he is. Buy and hold Dave Bartosiak. And we can see from his portfolio, these are all companies that have already reported. So these are all the old stuff. This is last quarter. Some of these names he hangs on to for a little while, and sometimes they work out. Like these two, they have worked out to 28% wins, even a 19% win. And there's one little loser there, but a bunch of green on this screen. So David Bartosiak, good job on that. So what does David do? He looks for the companies that have a strong Zacks rank and a good potential to beat estimates. When you have those two things together, you got a great shot at having an outsized return. And David's done a great job at this one. So why don't you check out that service? It's David Bartosiak's Zacks Surprise Trader. It's a wonderful service. Give it a shot. Until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.